So after the beatdown most of our portfolios took in March and April, especially if you're invested in like high growth or tech type stocks, most of you are probably in the same camp as me right now, and you look at your portfolio and it's hitting new all-time highs almost on a daily basis. And while that's great, we get to see a lot of green in our portfolio, we're making a lot of money here, it also means that deals are much harder to find right now, especially in some companies that we all know are great businesses. So what this results in is a slightly overvalued market. Certain positions are very overvalued, and I start getting cautious in these environments. But maybe what this means is I gotta stop putting so much focus in high growth and tech type stocks and start focusing on other companies, maybe industrials or financials, which have seen some sort of pullback recently. Or maybe, just maybe, this is the beginning of a super cycle in these growth and tech stocks, and this recovery that we've seen is just a tiny portion of a massive run that we're about to see in coming months and possibly years. We've all heard the term that this is another roaring 20s. Tech's gonna lead the way this time. It's possible, but typically when everyone's on board with something, we have some bumps along the way. But anyways, what all this means is that I'm personally building up my cash position in my portfolio, because this is my way of hedging, when the market is expensive, I don't find many deals, I just build cash up, because when that opportunity does present itself and we see some stocks pull back massively, I get to deploy that cash. So for me, instead of going out and actually shorting the market and trying to predict where the top is in the market, I just prefer holding cash, guys. And there are going to be some events coming up in the next few weeks. Earnings season is just around the corner. I believe in about 2 to 3 weeks, we'll start seeing banks start to report, and then, tech starts to report and all this stuff. So we could see some fear come back into the market. However, right now, things are complacent, everyone's happy, we're pushing new highs. Now, on that note, an important thing to look at and follow closely, which is what I do, is look at the VIX. The VIX is the fear or volatility index, and it tells us, how much fear is out there in the market and how much stocks will typically move. The lower the VIX, the less fear, the less volatility, stocks kind of just chug along higher, slowly, day by day. And the higher the VIX, of course, the more, rapid movements we have in stocks, massive up days, massive down days, and that's when opportunity presents itself. For me personally, as the VIX starts going lower and lower, I start scaling back my purchases more and more, because like I said, deals are just kind of hard to find right now. It's only when the VIX sees a spike, which will happen eventually, that fear comes back, everyone's panicking, they're selling some great businesses, and then that's when I deploy my cash. I try to keep things very simple with my investing strategy. It's been working out well for me. I wait for opportunity, and it does pay off over time. So guys, as of today, I would say that my outlook on the market is cautiously optimistic. I think that 2021 will probably be a pretty good year for the market. And I think that, even in the next few years, we're probably gonna see some good returns in the market. Probably not like 20-30% returns, but a few percent here and there. I think it's going to be a pretty good market. I don't think we're going to see anything like we saw in 2020. But that being said, things are starting to look stretched right now, which means that, over the next few months, weeks, I don't know how long it's going to take, I think we're going to see some sort of volatility pick back up, and I think some fear is going to drive back into the market, which could result in some sort of pullback. Here's the SPX, which is the S&P 500 graph, and we can see that typically we don't stray too far away from that 50 moving average, which is the green line. Back in 2018, we pulled away after a phenomenal 2017, but then in Feb 2018, we snapped back quite aggressively, and the same thing happened in late 2018 as well, and then again it happened in 2020 with, March 2020, and then again most recently in the fall of 2020. Now we're here, mid-2021, we are super stretched, and we're about 11% away from the 50 moving average, which does make me feel a bit uneasy. It's totally normal for the market to go through cycles, right? There's periods of optimism, periods of pessimism, but we typically revert back to the mean, right? The mean here in this case would be the 50 moving average. We may stretch up a bit, but we snap back. We may go down a bit, but we come back up, right? Over time, that average seems to hold, And right now, we're on the higher end of it after, last year, March 2020, being well below it. So we pulled below, snapped back. Now we pulled too far ahead, so we got to pull back a little bit again and kind of level things off. That's just how I see it. The concerning part, though, is that we've seen a period now of around 8 months since October 2020 where the market has not pulled back to this mean average. And personally, as someone who looks at technicals while looking at fundamentals as well, I see things starting to look a little bit uneasy here, right? When I see valuations start to get stretched, stocks start to push all-time highs, and I look at them and I'm like, can't justify buying it. And then I look at the overall index and it's also way overstretched. Eventually something's got to give and things got to pull back. Now we don't know when that's going to happen. We don't know how long the market continue like this. It can go on for a while. We saw in 2017, we just kept going higher and higher and higher and higher till eventually, boom, something happened. We pulled back and fear was there once again in the market. So maybe we could continue 2021, continue pushing all-time highs, continue moving higher, stretching even further. But all that means, guys, is that when that snapback comes, it's probably going to be quite aggressive. It's probably going to scare a lot of people. But for those of us that are waiting patiently, building cash, waiting for opportunity, we'll get our time. But now let me just clarify something. Don't get me wrong here. There are still deals out there in the market. Just because the overall market's overvalued doesn't mean there aren't any individual stocks that are still undervalued. And I have been looking at a few of them recently because I'm just itching to buy something new here. I want to deploy some cash, but I can't find super good deals, but I'm finding some pretty good deals. And I'll be making videos on those companies here as we go along next few weeks, so stay tuned for that. Make sure you're subscribed. But I just want to say, overall as a whole, yeah, the market's kind of expensive. So guys, I'm not bearish on the market by any means. I'm a bull. Long term, I believe markets go up and to the right. Investing in great companies, strong cash flow businesses, they're going to provide you great returns over time. So I'm not a bear by any means. However, just looking at the data, looking at the facts I presented to you today, yeah, I wouldn't be surprised to see a nice 5 to 10% pullback in the S&P 500 sometime over the next few weeks or months. Anyways, I'm gonna go back to continue researching, looking for businesses, creating videos once again for you guys. I hope you guys have been having an incredible, reopening. Summer's here. Spend some time outside, enjoy it, because we've all been cooped up way too long in front of our screens looking for stocks. But, just turn that notification bell on because I will be releasing a couple interesting videos coming up. And there may be companies that you probably know about but haven't looked at recently, which are showing us some value. Anyways, guys, hope this video was useful. Just remember, the market does go up over time, but we do have periods of volatility. And right now, with the VIX pushing kind of 52-week lows, probably going to revert back a little bit and see some volatility pick up at some point. Anyways, thank you so much for watching, guys. Don't forget to invest positively, and I'll see you in the next one. Peace.